welcome, a critical minerals panel, investing in the mineral rush. 2 years ago, I presented here and I was about to go to the Tedeschi Trucks concert, and one of my favorite songs of theirs was Bound for Glory, and I wrote kind of like Lithium, Bound for Glory, and that was the heyday, of the last cycle in New York, that, lithium is not as well followed as, maybe in some other jurisdictions like Australia, where Stuart is from. But so I'm Howard Klein from RK Equity. I also manage, have a bunch of content creation, a YouTube channel called Rockstock Channel, an audio podcast called Lithium-ion Rocks, and a newsletter called Lithium-ion Bull. So, and I'm on Twitter. My handle is @Lithium-ion-Bull. And about 8 years ago, I focused almost exclusively on the lithium-ion battery, energy metals supply chain. But I've been in business for 22 years, and we've done copper and iron ore and lots of other metals, which are interesting again. And I believe we'll have more investors come into space kind of more broadly. But lithium is at a bottom, and there's been a lot of M&A we're going to talk about here with Rio Tinto buying Arcadium, most likely. I think that deal will go through. That will be the biggest acquisition ever in the lithium space at $6.7 billion, slightly more than when Albemarle bought Rockwood in 2014 for $6.2 billion for a more diversified business. So with that intro, Stuart McGlyver, managing partner of Amvest Capital, I guess a boutique advisory.
Thanks, Howard. A mining metal focused funds management broking business. And
you have a new fund.
Yeah, a critical mineral equity fund we launched a year ago. So this panel's timely.
All right. Erez
Ishilov, New York-based advisor, investor, director focused on critical minerals. Until recently, I was the managing director of Traxys Projects and Traxys Battery Holding, the investment arms of the Traxys Group. Before that, I was in the nickel space. And before that, I was a generalist business development guy, former lawyer who switched to the dark side.
Okay. We could very easily talk about lithium for 45 minutes, but before I only talk about lithium, are there any other metals that you want to talk about during this panel? So just make sure not to focus it exclusively.
Yeah, I think for us, we have our focus, a third on battery metals, lithium being one, and then a third in rare earths, and then a third in specialty minerals, niobium, boron, high purity alumina, germanium.
Okay, those are
niobium.
Some of those are very niche-y, and we'll leave that for, I think, a future panel. But critical minerals, this is a critical materials panel, and I listened to a podcast about aluminum yesterday that they were arguing is not a critical mineral, but I think pretty much everything is a critical mineral. But anyway, Erez, did you have any?
Copper, I suppose, is
copper. Okay.
Yeah.
And copper has been prevalent for
elephant.
M&A as well, right? So Philo got bought, and I heard that was it BHP's CEO was in South Africa again last week. So maybe that'll there's some speculation that they'll be another
on Anglo
for Anglo.
Yeah.
Okay. So Stuart, I attended a couple of your events recently. One was for Lithium-ionic, which was in Brazil, and you mentioned you had kind of visited that area, and we saw Pilbara buy Latin Resources. So in terms of potential consolidation opportunity, what do you think of that area?
Yeah, I think Minister Rice was great to attend. I saw Sigma's asset, Latin Resources, and Lithium-ionic. And key takeaway from Latin was the culture there was really good. Chris Gale was including everyone, pointing out to people, that person was responsible for discovery, that person's responsible for this. I think Lithium-ionic and Latin makes sense to go together logistically. So I guess we'll see on that.
Do you see other, like Sigma, it's all in Minas Gerais, right? These are decent size, not huge deposits, but couldn't Minas Gerais follow kind of Western Australia like you see in iron ore?
Yeah, definitely think they could, especially the fast track permitting process. Any land that's been disturbed by humans, so real estate development, farming, you'll get a fast track 6-month permit for mining because the land's already disturbed. It was interesting to see Sigma's asset, like the mines. The trucks were very small, and it's kind of seemed a bit like mum and pop kind of operation, but the plant was like brand new, SMIC, big. So, and I think they showed how you can look after the community. I think I recall like Anna put on a 1% royalty just to go to that community on production. So, the locals really want to work there, and you have the whole community on board. So that was good to see.
Yeah, we interviewed Anna, and we saw you together. You took a picture, Eras, at their investor day, not too long, during Climate Week. So, have you been down to the Brazilian projects?
Yes, although last time I was there was right before COVID.
Okay.
So I haven't kicked the tires more recently, but I did go. I'm on the board of Luna Lithium, which has some exploration assets in Minas Gerais and in Paraguay. So I did go to look at the Paraguayan side of things. Just going back a little bit to the consolidation/takeover discussions that we had earlier. If you take a step backwards and see what Rio really bought, it's diversified geographically, but also it's diversified in other parameters. It's brine and it's hard rock, and it's a little bit daily, exactly, and it's in production and potentially in. So when we're thinking about consolidation to a level where perhaps another major could write a check and buy it, maybe it's beyond just buying the neighbor across the fence, or even an Australian company buying an asset in Brazil or in Canada. Potentially, maybe to make it big three or big five worthy, you need more layers or more parameters of diversification to make it interesting enough for them. It could be a coincidence, but it could be more than that, because we were talking about these deals imminently happening since 2019, I think, and they didn't. Maybe for all kinds of subjective and geopolitical and global health reasons, but potentially also there's something more fundamental for a major mining company that is not involved in lithium, or at least not substantially. Perhaps when they do make an acquisition, they want something that's more diverse and more advanced, and perhaps has those sort of risk offsetting internal mechanism. If this doesn't work, the other one will.
Yeah, I think with lithium, it's also more of a chemicals business than a traditional mining business. It's not like iron ore, dig up the rock, you might put it through a gravity circuit, then ship it. Spodumene is probably similar, hence why you're saying, a lot of expertise in Western Australia and Brazil, given their iron ore countries. But Rio's shown that they have the kind of chemical know-how. Pretty cheeky comment from the CEO saying that they're not scared, or, doing anything downstream is pretty easy. I wonder how the West Australian Kwinana people think about that comment. But, they have a view on pricing that China does. China has an infinite time horizon on capital. And so Rio is like, I don't care what the lithium price is today. I care what it is in a decade or 15 years. And that's what China's been doing for all these metals over the last, 30 years. They take a 50-year view.
It's very interesting, Rio. When they announced their Rincon acquisition in 2021, they said that the market was growing 25 to 35% per year this decade. When they announced the Arcadium deal, they said the lithium market is growing by only 10%, but through 2040. So they've now used a 15-year time horizon, which is a much slower, growth rate. But anyway, I think they're sandbagging a little bit. I think the growth might be a bit higher than that, and I think they got a very good price. But it's interesting you say the strategies are different among the majors, but if you look at the kind of Western Australian iron ore companies, Rio, Hancock, Minres, they all like spodumene, or they like lithium, and now Rio. So BHP is a little bit of an outlier. Glencore has not so much been in the iron ore business. I guess Anglo has, so I don't know what their strategy, related
They're selling
to
assets now.
is.
They're selling their nickel,
Yeah.
their whole nickel cluster in
Exactly.
Brazil, and
Yeah.
Horizonte, by the way, because of the CCAA is also doing that. So, yeah, if we're on the nickel side, the let's call it Caribbean or South American laterites are not doing as well as the as the tropical ones in the Indonesia, Philippines, French, New Caledonia, etc.
Anna was more interested in going to sulfate than she was in consolidating
Yeah.
within Minas-Gerais. That was
The-
heard it talked about, quite a bit. I know AVZ was talking about it in DRC because to ship, and Pilbara is talking about some intermediate product. I don't know,
Phosphate, yeah,
is it
lithium phosphate.
So I don't have a strong knowledge to know if sulfate or phosphate, but an intermediate product. I mean, the idea that you're shipping 94% waste, and should there be an intermediate product to avoid that, I think has some merit. But yeah, it hasn't yet been proven. The question I was getting at, though, when I was bringing up this iron ore analogy for lithium has been prevalent. I've subscribed to it. It largely correlates to spodumene. But in the Rio Arcadium deal deck, right, they had the comparative cost curve was copper, not iron ore, number one. And then number two, you're saying that Rio's saying it's easy to kind of process downstream. Maybe they're thinking because they have a whole bunch of aluminum smelters, or aluminum refineries in Quebec, and they also have titanium processing. And, so have you thought about, and I was just listening to, again, this aluminum podcast yesterday, and there's bauxite, aluminum, there's a lot of corollaries there. So what's the right analogy? I like to believe iron ore is the right analogy, because then if you own the upstream rock, if you own your own rock, you're God, to quote, Minres, Chris Ellison from a couple of years ago. Those are very high margins, but it's not as big a bulk commodity. It's very different from iron ore in a lot of ways. Well, now that lithium prices are so low, a $50 or $150 transport cost matters when lithium spodumene price is 1,000 or 800. Doesn't matter so much when it's 3,000. But you're right, the logistics. So Canada's at a freight differential disadvantage. So let's talk about how do we build an ex-China. How do we get over that? Like almost all the conversion.
Yeah, I think people talk about the pricing as well, want to have two pricing regimes. I think they need to focus on having, lower cost of capital for the Western developers, because, if you're funding it by equity and you're doing a 20% discount plus warrants, you could be 40% cost of capital just for equity. Whereas, you look at China, they have zero cost of capital essentially. So I think if the Western world really wants to do this, they need to lower the cost of capital. So whether that's having, lower coupons from, quasi-government debt or grants, like the US has shown some good initiatives. They have a big checkbook, but I think that's what they've got to do, is reduce the cost of capital for these assets.
In North America, you've seen, the DOE is going to loan, Lithium Americas or Thacker Pass $2.3 billion at treasury rates, but the cost of those projects have increased enormously, in part because of the strings attached to those loans. So on the one hand, the U.S. government is lowering the cost of capital. On the other hand, it's somewhat increasing the capex. Do you agree with that? I mean, at least I think that's how I see. So it's hard. Unionized labor and
Right.
other kind of like environmental justice and other types of programs that just raise. They force you to do certain things that.
Yeah, I think it's also complicated when, if the assets are, let's look at nickel in Indonesia, China, from what I understand, shows zero care for the environment there. So they just, they don't have to have those environmental programs. But if you want to develop these assets in countries with, populations, you have to, it's a higher cost with, say, some environmental issues or, community issues as well, which does increase the cost of the capex.
Yeah. So will the customers be willing to, on the flip side, GM, wants to lower the cost of their batteries. So they don't want to pay $20,000 a ton, for that carbonate. So I just always, it's a big conundrum. Like, what's the best way to kind of make this happen, in, North America, I guess, for North American, supply chain. But, you do have big balance sheet people. I mean, so you talk about Standard Lithium and Equinor and Exxon is there. And SLB, Schlumberger, has a new technology. Exxon. You said DLE and Rio Tinto, so Iliad is a technology which was connected to the Salton Sea energy source minerals.
Yeah, I think you saw a lot of money in oil and gas get invested into technologies, and you're kind of seeing that in DLA. So I'm kind of hopeful that more money is going into like research and development and technology of processing all minerals, because I think there's been a huge underinvestment over the last 40 years. The fracking boom with gas saw a huge increase in money spent on ways to optimize those operations and make them cheaper.
There is a bit of R&D going in that direction. Things like, microwaving the rock instead of roasting it as a way to open it. There's an interesting company actually that came out of the New Lab stable and are now well funded and already doing their Series B called Eden Geopower, which is in the how to use less energy for mining, crushing, and milling. It's a big consumer of energy in the space, and a lot of it is and it's carbon intense. So they very simplistically zap the rock with a certain current that makes it more fragile and brittle, therefore easier to mine, but also easier to leach. So potentially that can reduce the time and the acidity required in our sector. So that's something that's potentially relevant. And there's a company called IROX in France from it's actually one of the Friedland stable startups that's also looking to do the same thing. So there are R&D and even technologies that are, if not TRL 9, pretty close to that are looking to solve for various inefficiencies in the mining and processing of ores and minerals. In a way, I think that some of the oil majors were doing for decades in their flow sheets. Just finding ways to make it cheaper, more efficient, and easier.
Yeah.
So we'll hopefully start ripping the benefits of that in the years to come.
Yeah, I think you have to see that come through the producers, existing operators who are happy to take that risk on new technology. Once it's commercial, it's a real struggle for these juniors or mid caps in the public markets. You hear the word technology and mining, and all the investors in Canada and Australia run away.
Do you know of any technologies that kind of Rio invested in over the years that has been commercialized?
There's the Jetty guys in Colorado as well that are doing something in copper. But
low-grade copper.
Yeah.
They've developed, but it's not yet commercialized. So I'm just, because I know they have a big technical center in Quebec for titanium and other kind of critical minerals, that they were playing around with some tailings in California, which was out of that area. We talk about, the big balance sheet oil companies and mining majors, but there's a lot of kind of R&D that happens in these companies, and a lot of projects that they may promote over the years that also just die. So I do wonder sometimes they'll be fundamentally commercial. That's where my skepticism is. Will they indeed commercialize these? There's one thing in Arcadium's case, they're buying an established business that they can grow organically through, existing technology, right? The DLE is optionality, right, for the future. So we'll see. So we have about 12 minutes left. You want to talk a little bit about copper?
Yeah. Yeah, the copper. Yeah, no, definitely, yeah.
We don't have to talk about copper.
No, we don't have to talk about copper, but we can talk about copper. One thing I do want to talk about before we forget is, and I think you mentioned it in our prompt on our email prompt is alternative cathode chemistries or cell chemistries in general.
Yeah, I want to talk.
Are they gonna make more minerals critical, or are they solving for criticality and in the NMC hydroxide sort of flow sheet? Will LFP or sodium make a difference in terms of where we're heading?
Yeah, you're seeing lots of the fluctuations. As I'm reading recently, some groups want to look at adding cobalt back in the mix because it's the price is so low. But we're seeing the fluctuations between nickel, manganese, and the LFP batteries impact. But yeah.
And Thacker Pass, that is not going to come on stream really 2028, but they have now, I don't know, a 20-year offtake, stage one with a right for stage two offtake. So they're thinking very long term, and that's carbonate. So GM definitely seems to be planting a very firm foot. You said the next 5 years may be spoken for, but looking at a long-term future, I guess carbonate could be converted into other chemistries as well. So if you start there, they're not totally beholden to it. But anyway, it's just we'll see how that evolves. But did you guys have a view on hydroxide versus carbonate, in North American market?
If we are going to go to North American LFP, at least to some proportion, and that maybe will be something that we were talking a lot about the slowdown of the acceleration rate of adoption here, and how we perhaps just marketing 101 finished. There's no more early adapters, and now you're with you have to convince the average Joe, and you need your Model T. Not everyone wants to spend $125,000 times two to go to the supermarket.
Yeah.
So from that perspective, LFP and maybe MFP is a solution. The Chinese, again, have an advantage here because the iron phosphate comes from recycled material and a different supply chain over there from the titanium. While here it's going to be, we're going to need to figure out our IRA compliant iron and phosphorus. But it looks like there's a lot of work going on in that direction. Mitrachem just got approved for their both the federal grant and the Michigan State grant, and it looks like LFP and potentially LFP will start being produced here. So maybe it's sort of it's a coexistence that's application specific.
Yeah, I think as long as the infrastructure, the charging stations are in place that you can handle a different battery, people shouldn't worry about what goes in the battery. Leave that for people above my pay grade. But as long as any new battery can fit in, say if we're talking about cars, don't do an Apple and have a specific unique charger. Have one charger that fits any car, no matter what battery. If the battery changes, great. If not, it still works.
Why don't we talk about that a little bit? Arcadium put out 3.5 million tons as their forecast in their investor day, which was higher than kind of Albemarle had, and some were arguing maybe they were just dressing up the investor day, for the company for sale. But what do you think about demand, lithium demand, supply, balance? Because you're right, if demand grows as fast as it has been growing, then we'll grow out of this, doldrums that we're in. But if not, and then it doesn't matter really if it's NMC or LFP, lithium units will just be needed everywhere.
I think we're seeing a bottom in the equities market, perhaps not in the physical demand supply. That might be a couple of years away, but equities are typically a leader indicator, and catching a bid with some of these M&A deals, and it's going to take 2 or 3 years for them to get those products up and running. So perhaps that'll be the period where the pricing is improved. But I think we're definitely seeing a bottom in the equities for lithium.
So you saw Pilbara in Brazil, and you saw Rio in Argentina and Quebec, but you haven't seen this time last year, you saw a lot of activity in WA. You didn't see that this year. I guess Hancock and Minres kind of carved up a bunch of things themselves. So where do you see, most likelihood of M&A activity in the next kind of 3 to 6 months?
I think Canada, Quebec, like Patriot, that's probably a sitting duck right now. I was recently in Perth, got back on Saturday, and it was interesting speaking to some of the lithium CEOs, and with the pricing and the job losses across the whole state, across all commodities. I think Hancock is kind of hurting with the price they paid in Azure, and the downstream guys are hurting there with like their hydroxide facility in Kwinana. But US assets, Canada assets.
Who are the buyers, though? If Hancock's not a buyer, if like Albemarle is like struggling, Rio just made a big acquisition. So like, who are the likely buyers in Quebec or elsewhere?
Maybe US chemicals business.
Okay.
Okay.
Okay. I was wondering why there wasn't like a kind of private equity kind of competition for Arcadium. If you just kind of pencil it out, if there wasn't a natural alternative buyer like an Albemarle or a POSCO, because the check size was too big. But I don't know that the private equity, KKRs, the Blackstones, if they're yet
It
Yeah,
needs
that's
a
right.
real miner to buy it, a diversified miner with decades of experience. It's the only way to take it forward, I think.
Yeah.
Yeah, and patience.
Oh, thank you. You talked about briefly that Asian demand is sort of more predictable, the West more of a swing. I'm wondering how much some of these investments, particularly from the U.S. OEMs, might be impacted by changes in some of the incentives in the IRA. I know there's a lot of questions there, but how reliant, or is there just sort of enough global demand that these global players are interested enough across the battery metals?
I think the ship sailed for a lot of in the US. If the Republican comes in, even though some people think EVs are woke, I think the incentives are already there, the jobs are created, the factories are being built. So I think it'd be hard to wind that back in the US.
And by the way, as a potential strategy, just tracking the companies that were approved for a federal grant and or a state grant, subject to matching, to private sector matching. It already went through a pretty, a very deep due diligence process, ticked a lot of boxes. It obviously has support in several circles for some of these private equities and potentially the private investors. Making that a selection criteria and providing the matching to actually help reshore, onshore, reindustrialize the whole energy transition here in the States is probably not a bad idea.
Yeah, there's definitely bipartisan support on kind of anti-China and shoring up the functioning West supply chain.
Yes, sir.
Yeah, just a quick question. I think earlier in the panel, you talked about China having a very long-term 50-year policy or thinking. Is that changing much now with, just some of the global, inputs and suggestions somewhat where they are putting more either defense or they're listening to this more and adapting more?
I think their view might have even gone more longer term. They want to be energy independent off the Malacca Strait. And so I think their 100-year view is they want every person in China to, whether you're going from a bike to a car or a bus, to be electric. And their grid is going to be powered by coal and nuclear, all local. And so, they're going to be completely energy independent.
Well, thank you all panelists for a good conversation and one-to-one for having us all again, and the audience members for listening.
Thank you.
Thank you.